I'm Craig Popp with Accrue Wealth, and today we are going to focus on alternative assets and understanding their role in long-term portfolios. Achieving equilibrium between immediate market movements and enduring investment objectives presents one of the most significant hurdles for investors. This challenge persists whether markets are experiencing upward momentum or facing downward pressure. Fresh developments across equities, digital currencies, commodities, and various asset categories naturally draw investor and media focus. Such attention can generate urgency to respond to daily news cycles and potentially trigger concerns about missing opportunities. Through the cyclical ups and downs spanning recent decades, long-term investors have discovered that no investment opportunities come without trade-offs. Traditional asset classes like equities and bonds continue to serve as portfolio cornerstones because they offer the risk-return balance necessary for achieving financial objectives. Temporary market enthusiasm, whether directed towards technology equities or digital currencies, can shift rapidly and unexpectedly. Investment success stems not from attempting to predict these fluctuations, but from building portfolios that can capitalize on diverse characteristics while staying aligned with long-term financial strategies. Ultimately, what matters most isn't whether your holdings include the trending investment of the moment, but whether you can achieve retirement security, support your family, purchase a home, or contribute to meaningful causes. With digital currencies reaching unprecedented peaks, industrial metals hitting record territory, and precious metals like gold and silver advancing, investors confront a complex balancing challenge. How can we approach these asset categories from a comprehensive portfolio standpoint rather than treating them as isolated opportunities? Bitcoin has reached new peaks as lawmakers examine various cryptocurrency regulations during what's being termed Crypto Week. Specifically, the House of Representatives is reviewing the Genius Act, which would establish stablecoin oversight. Digital currencies engineered to preserve value, typically anchored to the US dollar. Representatives will also evaluate the Clarity Act, designed to create clearer regulatory frameworks for cryptocurrencies, and the Anti-CBDC Surveillance State Act, which would prohibit the Federal Reserve from developing a digital currency. Generally, Bitcoin and similar digital assets capture investor interest through their dramatic price movements, increasing institutional adoption, emerging investment vehicles like ETFs, and worries about fiscal and monetary developments. Many of these subjects involve complexity and speculation. For investors focused on the long term, the crucial consideration is whether digital currencies can serve meaningful portfolio functions. Bitcoin's portfolio appropriateness depends on individual objectives and risk capacity. Bitcoin experiences price swings multiple times larger than equity markets. Throughout the 2022 market decline, for example, Bitcoin dropped more than 75%, while the S&P 500 fell approximately 25%. This illustrates how digital currencies can magnify portfolio risk during periods of market tension. While it did stage a more robust recovery, this chart demonstrates that the S&P 500 and Bitcoin have performed comparably since 2018, though through different trajectories. It's also worth noting that cryptocurrency performance varies significantly beyond Bitcoin. Ethereum, another prominent digital currency, shows negative returns this year and has dropped roughly 25% from its December peak. Numerous other cryptocurrencies and meme coins have followed distinct patterns. As consistently emphasized, avoiding headline-driven reactions and carefully evaluating these assets within portfolio frameworks remains essential. Copper, another asset receiving significant media coverage, jumped to record levels following the White House announcement of 50% tariffs on copper imports. Copper serves critical economic functions as an industrial metal fundamental to construction, electrical systems, electronics, and clean energy initiatives. This importance has earned copper recognition as an economic barometer, sometimes called Dr. Copper, since its price patterns are occasionally used to forecast economic directions. Currently, the United States depends on imports for 45% of copper needs, mainly from Chile, Canada, Mexico, and Peru. Tariff measures may eventually stimulate domestic production, but will also influence pricing and supply networks immediately. Also, China's significant copper consumption makes this metal responsive to global economic circumstances and trade dynamics. What implications does this hold for investors? Similar to Bitcoin and other volatile assets, distinguishing between rapid price changes and portfolio suitability remains crucial. Attempting to forecast copper's next direction resembles predicting precise economic and trade policy outcomes. Instead, investors should concentrate on whether copper and similar assets enhance portfolio characteristics alongside other economically sensitive categories, including equities. Gold and silver have advanced recently, benefiting from their conventional roles as potential protection against currency movements, inflation pressures, geopolitical tensions, central bank acquisitions, and other additional factors. Theoretically, gold and silver can function as value preservation during economic turbulence, although they encounter other limitations, including their inability to produce income. This chart illustrates gold's value appreciation during events like the global financial crisis. Across extended time frames, equity markets have surpassed gold's performance, even following its recent advance. Throughout the 2010s, many anticipated gold's continued rise as the Fed maintained low interest rates. The failure of this expectation to materialize highlights how challenging and counterintuitive predicting its direction can prove. What should concern long-term investors is their complete portfolio and its alignment with your financial objectives. Assets including Bitcoin, copper, gold, and silver highlight both their potential advantages and the significance of deliberate allocation choices. At minimum, these assets should enhance, not substitute for, diversified positions in stocks, bonds, and other fundamental asset categories.